Welcome back. It's time to talk commodities. We have Manisha in the house to tell us how the commodity markets have taken into that 25 basis points rate cut. Manisha.
Well, thank you for that. You know, it was a huge run-up that we saw in many of these metals. The open interest was also increasing. The buy call was there. There were no sellers in the market. But now that the event is done with, we are looking at some sigh of relief and some profit-taking as well. And the US Fed has signaled 2 more rate cuts as labor market weakens. There also was a statement, various statements, by the way, from Powell. But one thing that the market seem to be hinging on right now is that Fed is in a meeting-by-meeting situation regarding interest rate outlook. So that's what the street is looking for. So it still is a bit of a suspense as we go forward from here. If you look at the gold prices, then we did see a record high as soon as that 25 basis point rate was cut. We saw an all-time high of $3,704 an ounce, and then there was a big profit taking that you saw in the overnight markets. We saw gold declining all the way to $3,660 an ounce as well, and that's exactly where it seems to be trading right now. So while gold was down 1%, we saw silver down 2%. 2.5% of a decline is what platinum also put on table, and copper fell by 1.5%. So there was a sigh of relief. There was finally some profit taking with the event now done, and the market's reading into the statements there. But when it comes to gold, and with the kind of uncertainty that we are in right now, with expectation of more rate cuts and the central bank buying and the de-dollarization theme, most of the banks still believe that you're looking at higher gold prices going forward. Commerce Bank report came yesterday, 3,600 of an average in this year, 3,800 of an average in 2026. Deutsche Bank report also says that $4,000 an ounce of an average price is what they're looking at in 2026. So very bullish cues still continuing from banks. Goldman Sachs is talked about $5,000 an ounce in an event that you see treasuries move in case of gold. Even a 1% move could take the prices on the higher side. The other one that I want to talk about is copper. And here as well, we've seen profit taking coming in, but not for too long, because the markets believe that you are looking at demand going higher. At this point in time, it also has to do with supplies, though, because Chile expects national output to increase going forward. They're expecting 6 million tons of a record production by 2027. It's not just Chile, by the way. The state-run Codelco in the month of July has seen an increase of around 6.4% in sense of production. And BHP's Escondida is also talking about 7.8% of an increase. So immediate supply increase is what the street seems to be working with right now. And the China announcing 5% of a decline in production in September till time really seems to have been nulled by this. So with major moves done, the markets do anticipate there could be some consolidation today and tomorrow before we start seeing buying come back in for many of these metals.
All right, Manisha, thank you very much for that. Interesting as always.